These are the 7 most famous concepts in all of ICT. The smart money setups every guru on this app has sold you. We took all 7, ran them across 5 years of NASDAQ and S&P futures, more than 2.5 million price interactions, and ranked them on one brutal question: does it actually make money? Here's the board. And before we even start, look at the top. S tier, empty. A tier, empty. Not one of these famous setups qualified. Worse, the order is almost perfectly upside down. The setups with the best marketing landed at the very bottom. The single most popular concept in all of ICT, the order block, ties a candle we picked at random. And the only thing on this board with a real edge is something nobody is selling you. Let me show you how every one earned its spot, starting with the worst. Quick ground rules, because without them, this is just another guy with an opinion. Every setup gets tested the exact way it is taught, then steel-manned the smartest way we can think of, so nobody can say we strawmanned it. Each one is scored on 5 years of 1 in 5 minute NASDAQ and S&P data, $500 of risk per trade, stops checked first, 0 look ahead. Here's the tier system. F tier loses you money. D tier has no edge. C tier is real, but not the way you were told to trade it. B tier has an edge you can actually measure. A and S tier, an edge clean enough to build an account on. One more thing, for 2 of these, the order block and the breaker, we could not find a single honest backtest anywhere on the internet, so we built our own. 75,000 order blocks. Let us start at the bottom. Number 1, and it is the big one, the order block. The most popular concept in ICT, full stop. The last candle before a strong move, the footprint of smart money, the zone you were told institutions will defend. We found 75,000 of them across 5 years, traded them exactly as taught, and they lost. Minus 2.8 cents on every dollar risked, a 32% win rate at 2 to 1. Now here's the part that should end the debate. We ran the identical test on a candle we picked completely at random. Same stop, same target, same everything. Just a random candle instead of the order block. The random candle scored minus 2.9 cents. They are the same. The order block does not beat a coin flip. A plain pullback with no smart money story actually beat both. The most famous setup in all of trading, and the label does no work. Order block, F tier. Number 2, the silver bullet. A specific 1-hour window, ICT's signature time-based setup. And here is where it gets sneaky. The version with the highest win rate, the one that screenshots beautifully, wins 87.5% of the time. It also lost $218,000. That is the trick with these. A huge win rate built on a tiny target and a giant stop. You win and win and win, and one loss erases the whole row. We tested every honest variant of it. The best ones still lost 3 cents on the dollar. The setup with the prettiest win rate on this entire board loses you the most money. Silver bullet, F tier. Into D tier, the no edge zone, the breaker block. A breaker is supposed to be a failed order block that flips into support after price grabs liquidity. It sounds smarter, more advanced. So we built the second new backtest and put it head-to-head against a plain order block. Same win rate, 32%, almost to the decimal. But the breaker makes you put your stop way past the liquidity sweep, so you risk about 3 times as much per trade for that identical result. And it shows up 7 times less often, so you wait far longer for it. Then we did the obvious thing. We deleted the liquidity sweep, the one rule that is supposed to make a breaker special. Nothing changed. The breaker is a plain order block that cost more and shows up less. D tier. Staying in D tier, the inverse fair value gap. The idea sounds clever. A gap that fails becomes support the other way. We ran it head-to-head against the normal gap. Statistically, a dead tie. The only real difference is the inverse version fires about 20% less often, so you wait longer for the same result. Honorable mention down here goes to the volume imbalance, that tiny gap between 2 candle bodies. Nearly 2 million of them, respected just 56.5% of the time. That is barely better than a coin flip with a smart money name on it. All of these are real things that happen on a chart. with no edge attached.
Now it gets interesting. C tier. The things that are real but lie to you about how to trade them. The fair value gap. The most popular gap concept in the whole catalog. And as a prediction, it genuinely works. Across more than 500,000 gaps, price came back and respected the zone 76.7% of the time. 91% of gaps get revisited. That is a real magnet, not noise. So why only C tier? Because when you turn it into a trade, enter the gap, set a stop, take a target, that beautiful magnet collapses into a 28% win rate and an expectancy of basically zero. The gap tells you where price is going. It does not give you an edge getting there. Real concept, not a setup. C tier. Same story, bigger. Liquidity. The draw on liquidity is the single most real predictive idea in all of ICT. Equal highs, equal lows, those resting stops. We found over 1,400 clean pools, and price came back and swept them 90.6% of the time within a week, 78% within a single day. If you only used liquidity to predict where price wants to go, you would be right almost every time. But the trade everyone teaches, fade the sweep, buy the second it grabs the lows, that version lost money in our test. The prediction is elite, the trade is not. High C for the read, F for the way you are told to play it. So what actually earned a spot? The highest thing on this board is not a setup at all. It is displacement, a real, violent move that creates the zone instead of a lazy drift into it. When we split every fair value gap by whether displacement made it, the difference was the cleanest signal in the entire study. Gaps born from displacement held 82% of the time, gaps without it, 75%. And it was not just the gaps. Displacement is the one factor that nudged the order block, the silver bullet, every single setup we have ever tested in the right direction. It is the closest thing to a real edge in all of ICT. And notice, it is a filter, not a product. There is no displacement course, no displacement Discord, no displacement indicator at the link in the bio. The one thing that works is the one thing nobody is selling you. B tier, alone at the top. Step back and look at the whole board. The pattern is almost too clean. The harder a concept is marketed, the lower it ranked. The named, packaged, sold setups, the order block, the breaker, the silver bullet, are at the bottom. The boring mechanical filter nobody monetizes is at the top. That is the actual lesson. Now the honest caveats, because we keep the ones other channels cut. This is NASDAQ and S&P futures, not every market. These are mechanical, rules-based versions. A skilled discretionary trader may do better, though the burden of proof is on them. And displacement being the best does not make it a printing press. It is an edge, not a cheat code. The full tier list, the ranking, and every single backtest file behind it, including the 2 new ones we built for the order block and the breaker, are free in the Discord. Run them yourself. If we got something wrong, post it and I will pin it. And the next time someone sells you a setup with a beautiful name, you already know the move. Ask them for the dollars, not the win rate. We test, you decide.